And I think we can get our technical experts who will be joining in. Sudarshan Sukhani as well as Mitessh Thakkar. Good morning, gentlemen. Thanks so much for joining in. Well, we have been in that range, right? That 1850 to around 18,200 that we have been talking about. What's the trade today? We're likely to start off closer to around that 1850 odd mark. Sudarshan, you first.
Yeah, good morning. Well, we are in a trading range and there's no sense in trying to predict how this range will break out or break down. It's much better to stay put. Yesterday, there was some upside momentum, so buying was justified, although it didn't work out. Today, there is no momentum at all. So for today, I think the best trade is not to do anything. Remember, tomorrow is a holiday, so it's easier to step aside and let the market do whatever it wants. The trading range has to break either on the downside or on the upside for a meaningful trade to occur. But don't try to do it today. Just let the market tell us where it wants to go. So avoid.
Okay, avoid. So perhaps could be a sideways day today. Mitessh, what about you? What's your own expectation on the index? And while you're at it, tell us about individual stocks as well.
So I've been, advocating that a breakout will take place once we start closing above 18,185. That's not happening. A few weeks back, it was 17,800 on the downside. That also didn't happen. So it's still a market which is contracting within a range. Broadly, 18,200, 17,800 are the contours. And I think there is now a chance of us breaking on the upside, given the fact that the daily indicators are slightly turning positive. But again, the price action has to confirm it, and that will happen once we get a closing above 18,200. So till then, dealing with more of stock-specific biases, and that's how we are approaching it, but waiting for a breakout or a breakdown.
Gentlemen, good morning. It's almost like a ship adrift at sea without wind in the sails, right? I mean, just you wait for the wind to come and then catch the sails, and then it'll take you. Otherwise,
it's also called the lull before the storm.
You had to throw the word storm in there. So,
I'm not
we don't want a
pessimist.
storm. We want a gentle gust of wind, which takes it nicely, but not too rocky. Well, let's get stocks out of the way. Sudarshan, in terms of trades, what do you have on your list today?
Well, it's a choppy market likely, and Hindustan Lever is a buying opportunity, Unilever. Remember that had a big decline on the results, and that gap is now getting filled up on the upside again. So that decline was a knee-jerk reaction. It's a buying opportunity, the stop under 25.50. Intraday shorts are possible in Adani Ports. Short selling should be done only intraday. Adani Ports is an intraday short with a stop above 774. HDFC AMC. That AMC, which is falling day after day, is another intraday short with a stop above 2010. And finally, Infi is a buy. Infosys is breaking out from a small flag-like pattern. Now, whether it works or not, this market is not rewarding anything. But for whatever it's worth buying into with a stop under 1540.
Okay, got that. Sudarshan, Mitessh, what about you? Individual stocks?
I will have a mix of buy and sell calls, so 2 buys and 2 sells. On the buying side is Bajaj Auto, which had a good breakout yesterday. Today, with the SGX mildly down, you might get a slightly better entry rate, but otherwise also, it's a buy with a stop below 36.45 for targets of 37.60. LTI Mindtree is the next stock that's on the buy list as well. Keep a stop around 44.55. 46.10.20 is the first target range. And on the selling side is Hindalco with a stop at 490. Where I would look for pullback to about levels of 470 on the downside, and Balrampur Chini, that's a sell as well. Keep a stop just about 380.5 for targets of around 360.
All right. Well, let's do one thing. Let's take a quick commercial break on that note. Lots more coming up. We also have Rakesh Arora of GoIndiaStocks.com for a discussion on Q3 earnings of Ultratech Cement and the sector as a whole. Stay tuned.